And right now, we're actually talking with John in regards to loan modifications. It's a huge question we get all of the time.
I do. Since the crash of 2008, It's been a very popular term where beforehand, no one heard of a loan modification. Little known secret in the mortgage industry. So I'll get right into it. Loan modification is nothing new, and it has been regulated more so where it's for your protection. This Consumer Financial Protection Bureau that started up after the Dodd-Frank Act in 2010 is regulating this now. So the horror stories you heard between 2008, the crash, to 2010 are not happening anymore. And if they do, you have somewhere to turn to as a consumer watchdog. So loan modification is exactly what it sounds like. I mean, every bank, every servicer, every direct lender has a separate loan modification department. It might even be in a different building, but it's for people that had a huge change in circumstance when it comes to your income decreasing. They may have lost a job. A couple may have went from self-employed to a W-2 making less money. Whatever a change of circumstance is, basically, if you have no other options, and if you heard from a loan officer, sorry, you don't make enough money to refinance, even though I'm saving you $300, you're probably a very good candidate for a loan modification. Now, this department also handles loss mitigations, foreclosures when they send the sheriffs for the auction. They handle all of this. So they're hearing a lot of hardship cases. So it may take a month or two to get results back.
Sure.
But I'll tell you how it works. Basically, it's modifying the original terms of your mortgage note based on your current circumstances. So let's say your spouse went from making $60,000 to $40,000, and you're struggling to pay your bills. You're paying your bills on time, but you're just making it. The math here is they're going to drop your payment with taxes and insurance to about 30% of your income, of your gross monthly income. That's before tax.
So they drop the tax cost too?
They can't change the taxes or the insurance, but they'll get your payment to work. So it could be a temporary fix, which is usually called forbearance, where you write a hardship letter, they send you a packet, and that could be a 3-month fix all the way to a 12-month fix. But a modification would be a permanent fix. The only problem is they're going to make it work so you have an ability to repay them and you're comfortable with all your other bills. So in their eyes, it's typically that number. Remember, 30% of your gross monthly income. It's easy to figure out if you're a W-2 or paycheck-to-paycheck person where your before tax income, let's say you make $5,000 a month. Multiply that times 0.3, 30%. Your payment's going to be $1,500 a month. If you're going from $2,600 to $1,500, that's a very powerful savings.
Yeah.
Now you can afford, kids' clothing, food. I mean, everything that's not on your credit report. But when you're filling out this paperwork and you're already at the 30% level, still try it. Give it a shot. You can turn down their offer. It takes, they're a very busy department. It takes a month. You hear stories that it takes up to 3 months. Everybody asks me, how does this affect my credit if I go through a loan modification? Or if you're already down on your mortgage, at that point your credit is already shot. Once you have a 30-day late and then you get into the 60-day late, you're not doing anything for a while in the way of a mortgage, 1 year to 3 years.
Wow.
To purchase. That 60-day late is almost read as a foreclosure for us. But if you're paying your monthly payment on time, you shouldn't get hurt too bad. They have to now, again, the CFPB, they regulate this, and they want the mortgage companies to write in, okay, this is under loan modification or forbearance plan on the comments, but as long as you're paying your monthly payment on time, you're okay. You're not getting a 30-day late. So while you're in the process, pay your mortgage. In fact, it's a law that no servicer or loss mitigation specialist or loan modification specialist can tell you not to pay your mortgage. It's illegal. They were doing that between 2008 and 2010, saying we can't talk to you until you don't pay your mortgage. And then they were getting foreclosed on. So that's where you hear the horror stories. And also pay your mortgage on time, even if you're on the 29th, just so your credit's still intact. So when you want to get out of this, or even if it's a 12-month plan, you can go back to the original terms, or they'll renegotiate based on your new income once you get your income situation taken care of.
I've actually had some clients who eventually had to short sell instead of get foreclosed on, and we'll talk about that in the next segment, so stay tuned. But they had to do that because the loan modification, what they said, didn't go through. It was difficult to get. I've heard some people have success, but I've had
probably because
more people haven't.
Yeah, I've seen this too. They probably show a lot of income. So the mortgage is not the problem. The mortgage is already 20% of their gross monthly income.
Yeah.
It's everything else in their life. Their credit card debt. They have maybe 2 car payments for BMW, and you know what I mean. So if they're paying $1,000 a month in student loans, it's all of that. That's really the problem. And the mortgage payment is where it's supposed to be for your ability to repay.
So this only goes by your income if you lose income. That's the type of hardship.
Yeah, because you figure when you originally qualified for a mortgage, let's say there was a couple that qualified and you had $100,000 a year and they dropped it to $60,000. One of your wage earners either lost their life or lost their job, or they're collecting unemployment, or they went to permanent disability. Drop in income can get you a loan modification without being late on your mortgage. That's where a lot of people say, well, I'm still paying my mortgage. Well, it's still worth checking into. I'll even do the math for them. You know, they'll show me their income docs, the current income docs. It has nothing to do with what you were making 2 years ago, like a mortgage, and we have to backtrack 2 full years. This is based on your current income, and will it help you stay in the home? You know, it could buy you time while you're trying to sell, but again, continue to pay your bills as if you always would.
Absolutely.
You know? I'm not a loan modification specialist, but it always hurt me when I couldn't give people advice. So, and of course, you do your research, and then you hear the stories, and then we have to study this to take tests anyway. Every year. You know, that's this. We're doing our renewal test this year, and loan modification is a big part of it.
It's great info to know anyways, because we have, some clients that go through it, and if you have any questions at all in regards to loan modification or in regards to refinancing is very hot right now. They're up right now because rates, are down. We'll be talking about those later on in the show as well. Rates are really good, very consistent. But if you have any questions, please go to the contact section on the roundtableradio.com.